The European Union is currently facing a significant energy crisis, exacerbated by a major shift in its energy landscape. On January 1, 2025, Ukraine made the decision to terminate its gas transit agreement with Russia, effectively halting the flow of Russian natural gas through its pipelines to Europe. This marks the end of Moscow's decades-long influence over European energy markets, which had relied heavily on Russian gas supplies. The immediate fallout from this decision has been an alarming rise in energy prices across Europe, with natural gas prices spiking dramatically. This surge has led to a significant increase in electricity costs, placing enormous financial pressure on both consumers and industries throughout the continent. The sharp increase in energy costs has also contributed significantly to the ongoing inflationary pressures faced by European countries. Inflation has further compounded the economic difficulties for governments that were already dealing with sluggish growth and fiscal challenges. Germany, as the largest economy in the European Union, has felt the full force of this energy crisis. Historically reliant on affordable Russian gas to fuel its industrial sector, Germany is now grappling with the double burden of sourcing alternative energy supplies while managing the economic fallout from rising energy costs. Despite considerable investments in renewable energy infrastructure, Germany has faced setbacks. Low wind speeds and reduced sunlight during the winter months have hindered the country's ability to generate sufficient renewable energy, exacerbating the energy shortfall. This energy shortage has deepened the existing vulnerabilities within Germany's economy, pushing it further into a downturn. The country is now teetering on the edge of recession, with its economy contracting by 0.3% in 2023 and facing minimal growth in 2024. In this environment of economic uncertainty, political dynamics within Germany are shifting. The far-right Alternative for Germany, AfD, party has gained considerable traction in public opinion polls. The AfD has been advocating for policies such as exiting the European Union, abandoning the euro, and re-establishing trade relations with Russia, including resuming imports of Russian natural gas. These positions resonate with segments of the population frustrated by the economic hardships they are experiencing and who are seeking immediate, pragmatic solutions to Germany's energy and economic crises. The potential consequences of Germany leaving the EU and the Eurozone are immense. As the cornerstone of the EU's economic framework, Germany's departure would destabilize the Union, undermining the single market and the common currency. Such a move would likely trigger widespread financial turmoil, disrupt trade relationships, and diminish the EU's geopolitical influence. The potential for this scenario has led to widespread debate, as the economic and political ripple effects would extend beyond Europe, influencing global markets and power structures. To understand the current energy crisis in Europe, it is crucial to look back at the origins of the situation. Germany's long-standing dependence on Russian natural gas is a central factor. For decades, Germany relied on cheap Russian gas to fuel its industrial base, particularly its automotive, machinery, and chemical sectors. However, the war in Ukraine and the subsequent halt in gas supplies from Russia have exposed Germany's vulnerability to energy disruptions. The shift away from Russian gas has triggered an urgent search for alternative energy sources, with limited success so far. The country's efforts to transition to renewable energy sources have been hampered by low wind levels and insufficient sunlight, particularly during the colder months, leaving the country grappling with an energy shortage. Germany's economic decline began to take shape before the full impact of the energy crisis was felt. Since 2022, the country has experienced a marked slowdown, with its GDP contracting and industrial production seeing a steady decline. In particular, the automotive industry, once the crown jewel of Germany's industrial sector, has faced a series of challenges, from slow adoption of electric vehicle technologies to global competition. Major automotive companies like Volkswagen have announced job cuts and plant closures in response to declining profits, signaling a broader malaise in Germany's manufacturing sector. The rise in company insolvencies has been stark. In the final quarter of 2024, Germany recorded over 4,200 company bankruptcies, the highest number since 2009. The insolvencies have affected nearly 38,000 jobs, with the services sector experiencing a 47% rise in bankruptcies and the manufacturing sector seeing a 32% increase. Among the hardest hit are Germany's small and medium-sized enterprises, known as the Mittelstand, which form the backbone of the country's industrial base. These companies are struggling with reduced orders and face a series of structural challenges, including high labor costs and excessive bureaucracy. In addition to these economic stresses, Germany's political system has undergone significant upheaval. In November 2024, Chancellor Olaf Scholz's coalition government collapsed after Finance Minister Christian Lindner was dismissed by the Social Democratic Party, SPD, amid growing disputes over economic policy. Lindner's departure led the Free Democratic Party, FDP, to exit the coalition, leaving Scholz at the helm of a minority government. The failure to secure a vote of confidence in the Bundestag on December 16, 2024, further highlighted the government's inability to function effectively, prompting President Frank-Walter Steinmeier to dissolve the Bundestag and schedule snap elections for February 2025. In the midst of these economic and political crises, high-profile figures like Elon Musk have weighed in, further complicating the situation. In December 2024, Musk publicly expressed support for Germany's far-right AfD party, declaring that only the AfD could save Germany. His endorsement has drawn both support and criticism, as some view it as a legitimizing boost for the AfD, while others argue that it represents undue foreign interference in German politics. The AfD has eagerly capitalized on Musk's endorsement, with party leaders engaging with Musk directly on social media platforms and during live-stream chats. While Musk's backing may sway some voters, polls indicate that it may not have a significant impact on the party's overall prospects in the February 2025 election. The AfD's policy proposals represent a stark departure from Germany's post-war trajectory. The party is advocating for a complete withdrawal from the European Union and the reintroduction of a national currency, arguing that the EU's financial framework and monetary policies have failed to protect Germany's interests. Additionally, the AfD has proposed significant tax cuts, including reducing the corporate tax rate and value-added tax, in an attempt to stimulate growth. However, these tax cuts could exacerbate Germany's fiscal challenges, raising concerns about the sustainability of public services and infrastructure. Another key plank of the AfD's platform is its stance on energy policy. The party has proposed reopening the Nord Stream pipelines to resume natural gas imports from Russia, a move that would entail reversing current sanctions on Russia. Additionally, the AfD is skeptical of renewable energy initiatives, proposing stricter regulations on the development of wind energy. These positions reflect the party's broader nationalist, isolationist vision, which contrasts sharply with Germany's established role within the EU and its commitment to the European integration project. A potential German exit from the EU, often referred to as Dexit, could have severe consequences for both Germany and the EU. Economists warn that such a move could result in a loss of 10% of Germany's economic output, amounting to a loss of €400,500 billion per year. The economic ramifications for the EU would be equally profound, as Germany is the largest economy in the Union and its departure could destabilize the EU's financial structure. Such a shift would also undermine Germany's influence in Europe, weakening the EU's overall economic and geopolitical position. Germany's economic challenges date back to the early 2000s, when the country's growth stagnated and unemployment rates remained high. Structural inefficiencies in the labor market and the lack of global competitiveness led to what was referred to as the sick man of Europe. The Agenda 2010 reforms, initiated under Chancellor Gerhard Schröder, were intended to address these issues by liberalizing the labor market and reducing welfare benefits. While the reforms did help revive Germany's economy, they also contributed to growing income inequality and precarious employment conditions. Germany's economic recovery after the 2008 global financial crisis further entrenched the country's export-driven model. However, this reliance on exports left Germany vulnerable to external shocks. The country's aging population and inadequate immigration policies have compounded these issues, leading to labor shortages and rising social welfare costs. Furthermore, Germany's chronic underinvestment in infrastructure and its slow pace in adopting digital technologies and green innovations have hindered its ability to stay competitive on the global stage. By 2022, Germany's economy began to falter, with the energy crisis and supply chain disruptions exacerbating the country's vulnerabilities. The country's heavy dependence on Russian natural gas, coupled with a shrinking workforce and rising welfare costs, has significantly hindered Germany's ability to maintain its position as Europe's economic powerhouse. The industrial sector, particularly automotive manufacturing, has struggled to adapt to global shifts toward electric vehicles and automation, while rising energy costs have further eroded competitiveness. As Germany faces a prolonged economic slowdown, its struggles are reverberating throughout the EU. The economic health of Germany has long been a key driver of EU prosperity, and any significant downturn in the German economy undermines the stability of the entire Union. Germany's role as the largest contributor to the EU budget means that its financial troubles create ripple effects across the continent. As the EU grapples with these challenges, debates over fiscal policy and the future of European integration are intensifying, with some calling for more flexibility in the Union's fiscal rules to allow for more dynamic responses to crises. In conclusion, the European Union is confronting a deepening energy crisis in the wake of Ukraine's termination of its gas transit agreement with Russia. Germany, already burdened by economic stagnation, faces significant challenges as it struggles to secure alternative energy supplies and cope with the rising costs of energy. This crisis has spurred political shifts, with the far-right AfD gaining traction by advocating for policies such as exiting the EU and re-establishing trade relations with Russia. While these proposals may appeal to some,